Morning everyone, hope you're well, hope you're doing alright. Today we're going to be talking about the silver trade through to the downside. I'm selling silver right now, 1-to-1 risk to reward ratio through to the downside. I also shared this trade with you guys a few minutes back right here on the Discord, and right now we're going to see how this trade goes. We're going to be talking about counter trend trading and how I was capable of making counter trend trading profitable. Now a lot of traders will advise you against trading against the trend, and they would always advise you that if the market is pushing up like silver right now, that you never enter sells. However, for the past 6 years I've been doing counter trend trading and I've been heavily profitable. I've been trading for the past 10 years. However, for the first 4 years I was unprofitable, and then through counter trend trading I was capable of turning my strategy profitable through this process that I'm going to explain to you guys today. So today I'm going to be sharing a little bit about my process and how I was capable of making counter trend trading profitable. So the idea is simple. The idea is that, let's say the market is pushing through to the upside. Okay, this is a bullish market, it's a trending market. I'm not looking to buy it, I'm looking to sell it. Now what am I looking to sell it? Of course, it's not enough to say, okay, I am bullish, I am in a bullish market, I want to sell, or I am in a bearish market, I want to buy. That will not work out, trust me. All right, I need to see some signs of bearishness, and I'm going to explain a little bit about what those signs are later. So let's say I see signs of bearishness right here. Signs of bearishness. Okay, let's say S, signs of bearishness. Now, as soon as I see a sign of bearishness, I am not as greedy as other traders. I'm not expecting the market to melt down and for me to catch, let's say, a 1 to 10, 1 to 6, 1 to 7 risk to reward ratio. That is not what I'm expecting. I'm simply seeing signs of bearishness, and I'm telling myself, listen, right here we have signs of bearishness. The market can reverse, but it also can remain bullish, and therefore it can just simply retrace down and then continue that bullishness. And therefore, in other words, if the market is bearish and I actually caught the beginning of that bearishness, then guess what? The market will run significantly in my direction. If the market is bullish and I caught a certain top, then the market is going to retrace down and then move in that bullish direction. And therefore, regardless if the market is bearish or bullish, all I want to catch is this movement right here through to the downside. That's all. So because that movement will be the movement that exists in common between a bullish market and a bearish market. As I said, regardless if the market turns bearish or if it just continues to be bullish and it retraces down and pushes up, that movement right here, it will most probably exist. And this is the movement that I'm trying to catch. Simply the small retracement through to the downside. Now, sometimes that retracement is a 1 to 2 risk to reward ratio. Sometimes that retracement is a 1 to 3. Sometimes it's a 1 to 4. It depends from that specific trade and how long do I see it can run. But this is the main movement that I'm trying to catch. And even if I want to hold that trade a lot more, the moment the market retraces down, I'm taking partials, I'm setting my stop loss to be. So I'm managing the trade the moment the market comes through to the downside. Now, for this specific silver trade right here, what are the signs of bearishness that I saw up here that led me to believe that the market is going to retrace further for this trade? And then if it wants to go up, it can go up. If it wants to go down, it can go down. I don't give a shit. So right here we can see on the weekly time frame, the market is pushing through to the upside, right? And I can see that this massive candlestick up there, right here, this last weekly candlestick, printed like this. So I can expect that if the market wants to continue bullish, that at the very least, let's retrace down into the middle of that candlestick and then push through to the upside. And I'm trying to catch that retracement through to the downside. That's about it. Now, what are these signs of bearishness that I saw for the silver trade? First of all, I went to the TET Capital report as usual, and I looked at silver and I saw that silver is neutral on the investor horizon, it is neutral on the swing horizon, and it is bearish on the day trading horizon. So we're finally seeing signs of bearishness. The market is heavily bullish, and right now we're seeing signs that the market can transition to the bearish side. And as I said, inside of this transition, all I want to catch is that small retracement through to the downside. So if I'm right on the bearishness, I will catch the retracement and the market will continue down all by itself. And if I'm not right on the bearishness, then I catch the retracement and then the market turns bullish, which I really don't give a shit about because I caught that retracement through to the downside. So right now I'm expecting the market to basically retrace down into that 37.5 psychological level. That's it. That's all I want. I want that small retracement down. And then regardless, if silver wants to really be bearish through to the downside, which I don't believe it will because There's no signs or macroeconomics or fundamentals that basically state that silver right now is going to be reversing direction and dying through to the downside. So if it wants to, regardless, if it wants to go to the downside, it can do so without me. I'll just catch the beginning of that move. And if it doesn't want to, and it just wants to retrace a little bit down and then push through to the upside, then guess what? I get to benefit also from the market reversing through to the upside, because I catch this retracement and then the market can reverse up. Now, of course, there's always the possibility that the market simply pushes up and takes out my stop loss. However, that doesn't happen very often, and that's why I can maintain my profitability. That's it. That's the simple process. So what I'm doing step by step, I'm looking for a bullish market or a bearish market. I'm looking for signs in the opposite direction, and then I'm trying to catch a retracement down. And as I said, if I'm right that the market wants to turn in the opposite direction, the market ends up running massively in my direction, but I catch the beginning of it, that's it. And if I'm wrong and the market doesn't want to go all the way down and just want to push a little bit and then be bullish, then guess what? I catch the retracement down and then the market can push bullish. I increase the probability of me winning because I'm winning in two different scenarios. I win in the scenario in which the market is bullish and it just wants to retrace down a little bit. And I win in the scenario in which the market really turned bearish and it wants to melt through to the downside. I win in both these scenarios, and therefore I increase the probability in my favor. That's the great part about counter trend trading. I believe the reason why the majority of traders fail counter trend trading, it's because the market is going up, they take a sell and they're like, the market will die, with no fundamental or macroeconomic justification for the market dying through to the downside. Doesn't make sense. Why would the market melt, let's say on silver right now? Would the market melt on silver right here through to the downside and die there? Do you have any fundamental or macroeconomic reasoning for it? If not, technicals do not guide the markets, guys. Yes, you can time the markets, you can have a technical edge in the market. However, technicals is not what decides the direction of the market. Oil isn't right now going through to the downside right here on the daily and right now retracing into this area because there's a fair value gap or an order block or a 50% area or a trend line that it wants to retest. No, you're talking about the global economics. The prices of oil will affect countries, and therefore, of course, it's not just seeking a certain fair value gap on the higher time frames or a certain trend line or a certain order block or all that. It's macroeconomics and fundamentals that drive the direction of price. And therefore, if you don't have a great theory as a fundamental theory, a macroeconomic theory, that silver prices are going to go down, and you're basing just, you're looking at this price and you're like, okay, you know what? We have a fair value gap here, which means that the market is going to go down into this fair value gap. You're wrong. You're wrong. As simple as that. Yes, it might happen because there's always a probability for anything happening. But even if it happens, it didn't happen for the reason that you thought it happened. It didn't happen because the market wanted to seek this imbalance and therefore silver prices globally and universally were affected just because the market wanted to seek a fair value gap. Of course not. The direction of the market on a long-term horizon, if you want to decide it, it's driven by fundamentals and macroeconomics. That's it. Gold and silver started pushing through to the upside massively in this run to all-time highs because there was wars ongoing for this specific year. And therefore gold and silver are safe havens and the market started pushing through to the upside. That's it. That's it. It's not because silver and gold are seeking some areas through to the upside and that's why they pushed up. No, it's because of global macroeconomics and fundamental events. And therefore, if you don't have a theory that something is reversing through to the downside, then it doesn't make sense for you to hold that trade like this much and be like, okay, you know what, I'm going to do this and I believe this is going to happen because there's a fair value gap down there. No, if you don't have a fundamental theory, then it doesn't make sense for you to hold it. That's number one. Number two, I always believe in the possibility of re-entry. So like I am not binded by just this one trade. If right now I take this trade and the market turns out to be bearish, something happens, okay? And the market, let's say something fundamental happens today or tomorrow, and the market turns out to be bearish on silver, and the market starts pushing through to the downside. I can always, after closing this trade, if I believe that the market just turned bearish, I can always just resell this and find a trade through to the downside if I believe it turned bearish. I don't need to have one trade and it's all or nothing. No, I can take this trade, it can end, and if I believe that silver actually turned bearish, I can then resell it again for another trade. So I can always re-enter if I believe that something has turned bearish because maybe my fundamental view changed or my macroeconomic view changed or I learned something new about the world or something that is happening or the USA or Trump made a certain decision, whatever. And I changed my view and I was like, okay, you know what? This is going to be like a sell, like a bearish market. Then I can go ahead and re-enter again. No problem. Like you don't need to catch it all in one trade. That's it. That's all for counter trend trading. Let's see how this trade goes. And then let's see if I can teach you anything further by the end of this trade. I'll talk to you guys soon. As you guys can see, silver melted into halfway through this candlestick right here, and then it started retracing through to the upside right there. On the 4 hours right here and the 2 hours where I took the trade, you can see that the market just simply melted down into that 37.5 psychological level as anticipated before, and then the market started retracing right now through to the upside. We can see right here from the results perspective that silver, those are my results by the way since 10 July up until today. You can see that for silver right here, those are the two positions that I have opened. Right there we booked profits around this 37.5 area right here, and that's about it. That's about it for silver. So it's as simple as that, guys. I don't want to take much of your time just announcing the results and adding information and all that, but that's it. Simple retracement through to the downside into the previous weekly candlestick, got the trade through to the downside, right now allowing the market to retrace and telling me what's going to happen next. That's about it for my setup and the way that I think and all that. I hope you guys enjoyed that video, and I'll see you guys in the next one.